So, good morning, guys. Welcome back to our YouTube channel. So, we'll just brief yesterday's Indian market. So, we know that yesterday Sensex closed at 77,094, and which increased by 291.17 points, which was around 0.38%. And yesterday Nifty 50 closed around 24,102, which is around which is increased by 89.80 points, and which is around 0.37%. So Nifty Bank has closed in 57,935, which is around 249.85 points and 0.43% in increase. And Nifty Mid Cap 50 closed around 17,880, and it is increased by 0.47%. And Nifty Small Cap 250 closed at 17,803, which increased by 0.51%. And Nifty Micro Cap, which closed around 25,249, which increased by 0.59%. So yesterday, market breadth was positive, roughly around 2,500 stocks advancing and 1,688 stocks declining, and 179 stocks was unchanged on BSE. So let's understand top gainers, which for yesterday. So the first stock was Cipla, which was around 1,470, increased by 4.82%. Tech Mahindra, which was closed at 1,440, increased by 2.16%. Sun Pharma, which increased by 1.37%. Infosys, which closed around 1,065.80, and which increased by 1.29%. So Reliance Industry, which was around 1,325, and it increased by 0.21%. So HCL Tech, which closed at 1,143, and closed at 1.1. It increased by 1%. Bajaj Finance was increased by 1.73%, and Axis Bank increased by 1.60%. So top losers for yesterday was IndusInd Bank, which was declined by minus 3.02%. Asian Paints was declined by minus 2.20%, and Titan was declined by minus 1.20%, and Indigo was declined by minus 0.61%, and Adani Enterprises was declined by minus 0.59%. So when it comes to sector performance, we knew that Nifty IT index that gained with a sharp 1% rise to 27,755 as the beaten down technologies sector stacked the recovery. So Nifty India Internet jumped 1.05%. Nifty Consumer Durables climbed 0.84%. Underperformers were Nifty FMCG, which managed only 0.17%, and Nifty Pharma uh, gained around 0.18%, and Nifty Bank added just 0.14%. So these were the sector performance for yesterday. So let's understand today's big story and what and all stocks to look for. So we'll just look for the biggest story for today. So the first news is Reliance AGM plus Geo DRHP filing. So this was the dominant domestic story of Monday, and it will continue to drive sentiment today as well. So Reliance Industry remained the key market drivers after Geo platform formally filed its draft red hearing prospects with SEBI. So a move widely viewed as a significant value unlocking event for shareholders. So the company also announced plans to commission its first AI compute capacity by end of 2026 and unveil GeoStar Gen AI Media Studio. So an AI narrative content creation platform, so its management reinherited its aggressive expansion plans across green hydrogen, solar manufacturing, and battery factories. While Chairman Mukesh Ambani stated that Reliance aims to more than double its consolidated EBITDA over coming years. So the IPO comes at a time when Geo's operating performance is robust. So for quarter four financial year 2026, Geo reported a 13% year-on-year increase in operating revenue to 44,000 to 928 crore. Net profit rose 13% to 7,935 crore, and EBITDA grew 18% with 230 basis point expansion in operating margins. So the deleveraging from IPO proceeds will empower Jio to pursue strategic growth in 5G, broadband, AI, and cloud services. So also from the Reliance AGM, Bharat Forge secured an INR 4.25 billion contract from the Defence Ministry to supply gas turbine generators to the Indian Navy. So which boosted defense sector sentiment as well. So yeah, the next one is let's understand why India rallied, and also along with that we'll understand oil plus Iran peace deal. So Indian stocks closed firmly higher on Monday, tracking improvements in macroeconomic conditions as key energy prices extended their decline. So reports indicated that US-Iran talks in Switzerland progressed over the weekend, backing expectations that a long-term peace deal could be struck within 2 months. So lower oil prices improve the outlook for Indian economy by softening inflation expectations and supporting the rupee due to India's heavy reliance on energy imports. So which will lift foreign inflows into Indian equities. So the gap up start came on the back of US-Iran talks concluding in Switzerland over the weekend, so which offered markets a rare dose of geopolitical optimism after weeks of tension centered on the Strait of Hormuz. So India had already confirmed that three oil tankers carrying over 860,000 metrics safely crossed the strait, route handling about 20% of global oil supplies. So this is one of the important news that might affect today's Indian market. So keep eye on this. Okay, so let's understand today's FPI and FII data, which was injected on Monday. So FPI records the strongest single day buying activity since early February. So improving global risk appetite, easing the geopolitical concerns, and falling crude price encouraged foreign investors to significantly increase exposures to Indian equities. So this is major positive signal. yeah, this is a major positive signal as FII had been sent net sellers for most of this year. So the reversal is the single most important institutional data point to watch for follow through day. So the bear case analysis are flagging. So the post-war rally is running into rough weather, and equities may pass amid multiple headwinds, which set by MK. And I pointed out that the US-Iran talks have gone off track at times, and monsoons are delayed by 3 weeks with IMD forecast looking bleak. And there are tech sectors whose after weak guidance and commentary from Accenture. So in the short term, we see markets consolidating at current levels with some risk of sell-off if oil crosses on $85 a barrel. So, Ambed Capital said India's 1 year underperformance versus emerging markets at 37% is close to the worst in 2 decades. So, India's 2026 and 2027 EPS revision and dollar terms stand at minus 14% and minus 15%. So, that was said by Amit Capital. He said that India's 1 year underperformance versus emerging markets at 37% is close to worst in 2 decades. So risk reward proposition look unattractive. Uh, with India's EPS growing, trailing EM peers while valuations stay expensive at 20x trailing 12-month PE. So FA have pulled out 49 billion, yeah, 49 billion since December 2024, and a ceasefire alone is unlikely to reverse flows unless growth accelerates or valuation correct. So let's understand today's Nifty 50. So today is Nifty 50 weekly expiry day. So broad market volatility from expiry will affect all sectors, particularly in the first and final trading hours. So India VIX at 27.32 signals elevated near-term volatility. Sector indices, including Nifty 80, which tend to exhibit wider intraday ranges when VIX is elevated on a expiry day. So what this means for your session is expect sharp moves from 9:15 around 11 to 12 p.m. as positions get squared off, and again in the final 30 minutes. This is not a day for slow risk management. So, GIFT Nifty pre-market signal hints a negative start for equities as of uh, as of 8:30, 8:30, and this reflects a U.S. market closing mixed Monday, where the Nasdaq fell around minus 1.32% and S&P around 0.37%, which is negative for Indian IT. So Nasdaq futures showing elevated tech pressure overnight, global hawkish Fed undertone, keeping risk appetite subdued, and mixed Asia cues this morning. So key level to watch at open would be whether Nifty holds 24,100, which is yesterday's close, and a break below 24,000 to trigger significant stop loss cascades, especially on expiry day. So key technicals for today would be support, which is around 27,400 to 27,200. Nifty IT, and for broader Nifty 24,000 is a 24,000 is a psychological floor. So
Your name?
Harish,
Harish. Sushma?
Sushma,
Yeah.
or so let's understand today's key technical level for Nifty 50. So support is around 27,400 for Nifty IT, and for broader market 24,000 is a psychological floor. So resistance is around 24,200 and 24,400, and a sustained break above 24,200 opens the door for rally towards 24,400, and a decisive break below 24,000 on expiry day could accelerate selling towards 23,900 to 23,800. So Bank Nifty supports at 57,600 to 57,500 zone, and breakdown below this band could drag towards 57,200 to 57,000. So resistance at 58,000 and a break above leads to 58,300 to 58,500. So let's understand Nifty IT sector. So it is at 27,400 to 27,200, and the resistance is around 27,900 to 28,000. So sustained break above 27,900 with volume of confirm a bullish setup on IT on Tuesday, and which is closed at 27,628 on Monday. So let's just look sector-wise volatility today. So IT sector has a mixed volatile. It is This is the most watched sector today given the global backdrop. So on the positive side, Monday 1% bounce in Nifty IT showed recovery buying after Friday's Accenture triggered crash. So investors concluded that Accenture concerns regarding Middle East project were unlikely to have a significant impact on overall global technology spending. So hence buying returned across Infosys, Tech Mahindra, HCL Tech and Wipro. So on the negative side, US markets were weak overnight. Nasdaq fell around 1.32% and Alphabet dropped 5% on AI talent exodus. So this will be on Indian IT sentiment at open. So the key question is, does Monday's IT recovery hold, or do overnight US views drag TCS, Infosys, HCL lower again? So we need to wait and watch. We'll be knowing at the end of the day. So just watch Infosys and TCS opening level. So if they hold above Monday's close, IT sentiment is confirmed. So if they open in red, expect Nifty to test 24,000. So let's understand the banking sector. So Bank Nifty closed at 57,935 on Monday, which is around 0.43% gain. So HDFC Bank, ICICI Bank, Bajaj Finance all showed buying interest. IndusInd Bank was the outlier, down 3.02%, continuing its underperformance trend. So the stock has been under persistent selling pressure. Any further negative news on asset quality or management commentary will amplify its side. So the broader banking sector should hold up provided FII buying continues. So banking sector closed at 57,935 on Monday, and which had a 0.43% gain. HDFC Bank, ICICI Bank, Bajaj Finance all showed buying interest, and IndusInd Bank was the outlier, down 3.2%. So continuing its underperformance trend. So the stock has been under. Let's watch IndusInd. Keep eye on IndusInd stock. So the stock has been under persistent, which has huge selling pressure. So any further negative news on asset quality or a management commentator will amplify its slide. So the broader banking sector should hold up provided FII buying continues. So let's understand pharma, healthcare, and its bullish trend intact. So pharma has been advancing for three consecutive sessions. Uh, Cipla led Monday's gain with a 2.35% rise, followed by Dr. Reddy's and Sun Pharma. So the sector benefits from a weaker dollar, which has positive US FDA pipeline news. So it has a defensive buying and investors rotate from expensive tech. So pharma has been advancing for three consecutive sessions. Cipla led Monday's gains with a 2.35% rise, which was so followed by Dr. Reddy's and Sun Pharma. So the sector benefits from a weaker dollar, positive US FDA pipeline news, and defensive buying as investors rotate from expensive tech. So Sun Pharma's strategic acquisition announcement. So watch for it and keep an eye on it. So Sun Industries described its latest acquisition as a strategic investment to strengthen its product portfolio. Yeah, when I do a detailed sector analysis, I'll put the stocks. I'm just reading the news related to it. If you want, So Sun Pharma's strategic acquisition announcement. So it has described its latest acquisition as a strategic investment to strengthen its product portfolio. So when we look at the technicals as well, it's showing a bullish structure. So wait for the retracement, and since it's overly extended, you can wait for retracement and the latest news when they announce it. So you can look for long positions. So the next one was Aravindo Pharma. It is the US FDA issued a 5 observation after a pre-approval inspection at their steroids. So Andhra unit, which is around June 10th to 19th. So this could create a stock-specific pressure. So I just put. So there is a 5 observation made after a pre-approval inspection. So this could create a stock-specific pressure. Currently, it's in a bullish structure. So confirm it with technicals. The stock says there might be a slight correction. So the next one is oil and gas. So oil prices declining below 80 per $80. Yeah. So I'll put crude oil futures. Yeah. So it is a direct tailwind for India's largest company by market cap. So falling Brent crude prices improved the outlook for Reliance refining and petrochemical business, promoting several brokerages to upgrade their outlook on stock. So the Geo DRHP filing has unlocked fresh institutional interest. RIL will remain a key market anchor today. This is one of most important news for today. So the Reliance Industries remain the key market drivers after Geo platform formally filed its draft red herring prospectus with SEBI. So this is a move widely viewed as a significant value unlocking event for shareholders. So the company also announced plans to commission its first AI compute capacity by end 2026. It unveiled GeoStar Gen AI Media Studio. It is an AI native content creation platform management re-edited its aggressive expansion plans across green hydrogen, solar manufacturing, and battery gigafactories. So while Chairman Mukesh Ambani stated that Reliance aims to more than double its consolidated EBITDA over the coming years, so the IPO comes at the time when Jio's operating performance is robust. For quarter four financial year 2026, Jio reported a 13% year-on-year increase in operating revenue of rupees 44,928 crore. Net profit rose to 13% to 7,935 crore, and the EBITDA grew 18% with the 230 basis point expansion in operating margin. So, deleveraging from IPO proceeds will empower Jio to pursue strategic growth in 5G, broadband, AI, and cloud service. Also, from the Reliance AGM, so Bharat Forge secured a INR of 4.25 billion contract from the Defense Ministry to supply gas turbine generators to the Indian Navy, so which boosted defense sector sentiment. So, when we look at the technicals of the stock, from the fundamental news, we can expect the stocks to go up. So just confirm it with technicals. We have a few supply zones here. So wait till the price closes above this area, so that you'll be having a strong momentum after this. So we can see a clear market structure break in 1 hour time frame. So if we look at the 15 minutes time frame, it's slightly in a correction trend. So once it breaks above this area, we can look for a upward continuation. So the next one is aviation industry. So lower crude directly reduces aviation turbine fuel, which is a major operating expense for Indigo and Iridia. So despite this, Indigo closed slightly lower yesterday. So yeah, Indigo closed slightly lower yesterday on broader caution. So watch for any Iran deal progress today. A confirmed peace deal would sharp re-rate aviation stocks. So yeah, we need to wait for confirmation for fundamental news regarding Iran and US. So once you get a confirmation, fundamental confirmation on that, then you might look for the technicals for price signals. So when we look at the technicals of this particular stock, it's in uptrend. So you can see the market as currently trading near a supply zone which created yesterday. So if you look at the 15 minutes, we have yeah. If you look at the 15 minutes, we have a supply zone which is created here. So yeah. So once we get the confirmed PST, then this would sharply re-rate aviation stocks. So the next one is defense sectors. So Bharat Forge secured a 4.25 billion contract from the Defense Ministry for gas turbine generators for the Indian Navy. So defense PSUs like HAL, Bell, and GRSC could still follow through buying. So yesterday we saw a sharp up move when our indicator generated a pricing, and it got around 6.21% within 6 days. So we saw a trend break in 1 hour time frame, a trend line break. So we can look for a retest in any of these areas. You can see a trend break here too. So once you see a retest and then it go on. Yeah. So So the big domestic story for today would be the National Stock Exchange has proposed IPO, which is expected to raise nearly 30,000 crores through an offer for sale. So this could become India's largest ever public issue. Zerodha's Nitin Kamal described NSE as a cash generation and distribution machine. So nothing. The exchange earned rupees 10,300 crore profit in financial year 26 and distributed 8,660 crore as dividends. So a payout ratio of 84%. This IPO headline will drive brokerage and exchange stock sentiments throughout the week. So let's next we'll move to key macro themes driving Indian markets today. So let me know your before that. Let me know if you have any favorite stocks to analyze for today. Just put it in the comments. I'll analyze it for you. So I'll be starting key macro themes driving Indian markets within 5 minutes. So meanwhile, let me know your favorite stock for the day, and let me know on which stock you're keeping an eye on. Yeah. So let's understand the key macro themes driving Indian markets today. So India's first one is the monsoon delay, which is the biggest domestic risk. So India's southwest monsoon has stalled after reaching Kerala, leaving the country with a rainfall deficit of 35% as of June 16. And the shortfall is most severe in central India and eastern and northeastern regions. So in central India, it's around 63%, and in eastern and northeastern India, it's around 43%. So while the monsoon has yet to reach Mumbai, more than a week after its normal arrival date, the delay comes amid the growing concerns over a developing EI, which typically weakens monsoon rains. So the MD expects the current slowdown to persist around another 5 to 6 days. So why this matter for markets is food inflation risk. So pressure on RBI to stay on hold or even turn hawkish. Rural consumption stocks like FMCG, two wheelers, tractors are under pressure. So agriculture and fertilizer stocks are directly impacted, and the weak monsoon, which is bad for broader market consumer discretionary sector. So MK Global flagged that monsoons are delayed by 3 weeks, with IMD forecast looking bleak as one of the key reasons in sharp rally is unlikely to near term. So let's also look at the RBI rates and watch closely. So the RBI rate cutting cycle is under threat from three different three directions. Which is elevated U.S. Fed hawkishness rate hike rise in 2026, a delay monsoon threatening food inflation, and a weakening rupee. So, Governor Sanjay Malhotra commentary is being watched closely. So, one sentence could move banking stocks 2 to 3% within minutes. So, current rates are in an easing bias. But the space to cut further is narrowing rapidly. Any hint of a pause or reversal would significantly re-rate NBFC, PSU banks, and rate-sensitive real estate sectors. So let's also look at the rupee and FII flows, the invisible, which is the invisible hand. So the rupee has been benefiting from lower crude, which has reduced import bill. It has improving Iran deal hopes and recent FPI buying reversals. FII have pulled out $49 billion since December 2024. Yesterday's strong FPI buying was the first significant reversals in the month. So if this continues for 2-3 more sessions, it could become a structural trend reversal. And the single most powerful catalyst for a Nifty breakout above 24,400. So look at the dollar strength as well, which is the counter force. So watch USD INR closely. If rupee weakens past, yeah, if rupee weakens, then FII inflows could reverse. So crude oil, I'll just put the chart here. So Brent is now trading at 78 to $79 per barrel, which is down from above $90. When the Iran war started in February, MK Global specifically flagged some risk of sell-off if oil crosses $85 a barrel. So every $10 move in a crude changes India's import bill by approximately $15 billion annually. So which is directly impacting the current account deficit, the rupee, and RBI's flexibility. So the Iran peace deal, which is 60-day framework for restoring Iranian oil flows, is the single biggest crude price driver globally right now. So more progress, lower crude, bullish India. So let's look at the today's corporate and IPO events. GVL Industries IPO, which opens June 23rd to fund capacity expansion. Yeah, sure. So one of the viewer has asked about to talk crude oil once more. So the crude oil is the Brent is now trading around $78 to 79 per barrel, which is down from above $90. So when the Iran war started in February, they specifically flagged some risk of sell-off if oil crosses $85 a barrel. So every $10 move in crude changes India's import bill by approximately $15 billion annually. So it is directly impacting the current account deficit, the rupee, and RBI's flexibility. So the Iran peace deal 60-day framework is for restoring Iranian oil flows, which is the single biggest crude price driver globally right now. So if there's some more progress and if the crude lowers, so then there could be bullish in Indian stock market as well. So if we look at the crude oil futures here, we can see even it's in a bearish sign. If we look at the technicals in crude oil, you can see the crude oil is making bearish structures. It's forming a bearish structures in 15 minutes time frame. And if we switch it to 1 hour time frame, again we could see there's been a bearish structure created and supply zone here. So yeah, we need to. It's in a bearish trend or in technicals as well. Hope you understood about crude oil. Let me know in the comments. If you have any specific doubt related to it, let me know. I'll answer. So basically, Iran peace deal was very important for restoring Iranian oil flows. So which is the single biggest crude price driver globally right now. Yeah, we can't fundamentally we can't predict direction because since Iran and US are yet to have a peace deal, so the 60-day time framework is the most important framework. So that will decide oil direction. So if there is a positive progress towards it, then you can see Indian stocks performing bullish. Thank you. So let's understand about today's corporate and IPO events. So GVR Industries IPO, which opens at June 23rd to fund capacity expansion, and Sridhar Spinner's IPO opens June 23rd to fund working capitals. So also coming Wednesday on June 24th, CSM Technology IPO opens June 24th, which is around 78.63 crores issue. So the Bhubaneswar-based e-governance IT firm reports financial year 25 revenue of rupees 199.2 crore to 24 crore and a profit after tax of 14.9 crore. So global earnings impacting India indirectly would be Carnival Corporation. So pre-market results today as global consumer demand indicator. So, as global consumer demand indicator, watch for commentary on travel and discretionary spending. So, this might impact Indian hotel, aviation, and consumer stock sentiment. So, if it takes post market tonight as a global trade flow, we can see guidance on shipping volume matters for Indian logistics names like Blue Dart, Containers Corp, and Gati. Since it's 10:20, I'll just be telling what to watch after this. So at 11 to 12 p.m., just wait for mid-expiry position squaring. There will be a high volatility during those time. And from 1 to 2 p.m., 1:30 to 2 p.m., wait for Iran deal update possible. So watch crude and rupees. And around 3 to 3:30, it's final expiry hour. Biggest move of the day is possible. And around 3:30 p.m., you can look for NSE provisional FII and DII data release. So you will be able to get who's the net buyer and net sellers. So after 9 p.m. Indian Standard Time, you can look for FedEx earnings, which is US after close. So you'll be getting a idea on all this, and you can understand the directions of Indian markets. So rest of the week for Indian stocks would be for tomorrow. Look for Micron earnings. It's a US company, so massive. It is massive for global chip and HPM narratives. It impacts HCL, Infosys, AI infrastructure plays. So CSM Technologies IPO opens. So ZF Commercial Vehicle Control Systems India's bonus X date. So Thursday, look for USPCE inflation print. Fed's preferred inflation watch. So if hot rate hike possible rises, rupee weakens, FII selling risk. Quarter Q2 US GDP third estimates. So on Friday, look for University of Consumer Sentiment. So quarter end institutional portfolio rebalancing flows begins to build. So watch for pension fund and insurance company buying in India. So ongoing is India and US trade deal. So US trade team in New Delhi working on final details. So Secretary Rubio has called talks at very final detail stage. So positive update could be a major catalyst for IT export stocks, pharma and textile. So key Indian market terms for your session for today would be if bull case oil stays below $80. Iran deal progresses. FPI buying continues for day two. Nifty IT holds about 27,400. Reliance Jio IPO excitement sustains. Monsoon shows sign of revival. So this would be a bull case. So for bear case, we saw a Nifty gap down trigger as expiry day cascades. IT stocks drag on hashtag weekends. So VIX spikes about 28 or 30 and monsoon data disappoints. Rupee weakens past 84. So FPI reversal on hawkish Fed. So the one number everyone is watching today, whether the Nifty closes above or below 24,100. So that determines the narrative going into the rest of the week. So above it, bulls in control. Below it, consolidation correction phase begins. Yeah. So good luck with the session. That's the biggest talking points for your audience are Geo, DRHP, Reliance AGM story, and expiry day volatility, IT sector direction, crude oil, and the FPI flow reversal. So those five themes will drive every major move today. So, guys, I'll be back in another 5 minutes. I'll be explaining about today's index, Nifty, Sensex, and Bank Nifty, and option chain analysis of each index. So, meanwhile, let me know if you have any questions related to your particular stock. I'll be back in another 5 to 10 minutes. So, guys, just a quick update on Nifty. Since Nifty closed below this resistance level in 5 minutes time frame, Nifty have chances to fall around 30 to 50 points. So just keep eye on it. And if you look at this, look at our software, it has also generated a sell signal. So just keep eye on it. I'll be back in 5 minutes with the option chain analysis. So yeah, we'll start analyzing the Nifty option chain. So Okay, since we are facing some technical issues, I'll just explain you the option chain analysis using Nifty chart itself. So we can see that Nifty is currently, Nifty is just Nifty is currently trading at 24,116. So it is up marginal by 0.06%. So the market opened near 24,102.90 and has crawled up slightly by 10:37 a.m. It is hovering just above a crucial psychological number 24,100. So the put call ratio is sitting comfortably at 1.1. PCR of 1.1 indicates a mildly bullish to range bound bias. So put writers are slightly outnumbering call writers, and they are creating a structural cushion for market. So India VIX is trading at 12.5, which is minus 0.4% decrease in numbers. So volatility is low and cooling off. So on an expiry day, a low VIX means option premiums are already cheap, and theta decay, time decay will accelerate rapidly, especially if the market moves sideways. So net intraday OI changes from 9:15 a.m. to 10:43. We see the total put OI added is 16.09 crore shares, and total call OI added is 11.68 crore shares. So the analysis is smart money is selling more puts than call this morning. So the next net institutional bias for the morning session is clearly buy on dips. So the market is expecting wild explosive moves right now. Instead, it's a classic expiry day battle where premium sellers are dominating. So puts are being written faster than calls, and 16 point it's basically a 16.9 crore put OI versus 11.68 crore call OI. So meaning that underlying bias remains stable to positive. Let's look at the put side. The 24,100 strike. So it has the astronomical green bar at 24,100. I'll just try to show the. So yeah. So 24,100 as the highest green bar. So this is the highest put open interest built up on the entire chart. So it is crossing the 5 crore mark, and we can also see that the 24,100 put option is increasing. So which is a vast majority of this portion was built intraday this morning. So just if we look at the technical chart, just have a mark on 24,100. It acts as a strong zone where price might react to it. So we can see exactly the price is trading near to the 24,100 mark. So if 24, even if 24,100 breaks temporarily, there is a massive solid green support stacked at 24,050. We could see our software also has a support zone over there, and currently the price has opened near it. It has given a strong rejection here, and it has moved up. So we can see a strong rejection over here, and it has moved up, and the price is currently reaching this area. So even if this breaks temporarily, price might reach here, and we can see a strong bounce since this has a huge support level. So put writers are big institutional players. So put writers are big institutional players who pocket premiums when market stays above a level. So by writing 5 crore shares at 24,100, uh, institutions are screaming that they do not expect Nifty to slip below 24,000 easily, 24,100 easily today. So looking at the monstrous green bar at 24,100 crore, that is institutional conviction. So the most of it was written today. It is around over 5 crore shares. So for the bears to drag Nifty down, they have to break through this 24,100 concrete wall. As long as Nifty holds about 24,100 on a 15 minutes closing bias basis, any minor dip is an aggressive buying opportunity. So let's look at the call side. So when we look at the call side, we have to look at 24,200 strike. So the highest red bar on the chart is 24,200, which is approaching nearly 3.7 crore shares in total OI. So just a minute, I'll try to share the screen. Yeah, so yeah, we were talking about the call side. So 24,200 strike, it is the main wall for call side. The highest red bar is on the chart is at 24,200. So it acts as a strong resistance level. So let's mark that level in the chart so that we'll be having a clear picture where the price may trade. So when we look at 24,200, so yeah. So yeah, it is approaching nearly 3.7 crore shares in total OI. So call writers are aggressively defending this level. So the immediate resistance would be 24,150. So which is yeah, it is a noticeable red bar that outnumbers the green bar. So this is acting as an immediate intraday hurdle. So if you look at our software complements with the strong resistance zone over there. So call writers believe that the market will stay below these levels because 24,200 as a speed builder. Sellers are confident that even if Nifty moves up, it will face an intense selling pressure once it approaches 21,180 in this level. It might even break this, but here when the price reaches, there will be a heavy selling pressure. So it's the it's the tallest on the call side. So also notice 24 150, the red bar is higher than the green bar. So this means Nifty is currently compressed in a tight 100-point trading zone. 2400 is a solid floor and 24 200 is your hard ceiling. Yeah. So let's look at how the chart is evolving right now based on the bars. So when we notice the 24,100 strike, it has both a massive green bar and respectable red bar. Big option sellers are writing put 24,100 puts and 2,400 calls to create an intraday straddle betting on heavy time decay. So keep a close eye on the red bars between 24,000 and 24,100. They are tiny, meaning bears have completely surrendered the lower territory. All the action is concentrated right around 24,100 to 24,150. So currently the price is trading near that zone. So this is the zone where we can expect the volatility to kick in. So looking at the scenarios for today's session. So if Nifty dips towards 24,100 to 24,110 and shows a strong bullish reversal candle, like a hammer or a bullish engulfing on a 5 minute chart. So you can look for long positions, and you can expect the price to go till 24,150 to 24,180. So the stop loss would be a strict 15 minutes candle close below 24,080. So this is for the account for minor fake outs below the 24,100 walls. So for scenario B, this would be if Nifty rallies towards 24,180, 24,190, but fails to cross 24,200, which by showing a strong rejection candle. So if price moves over here, which is around 24,180 to 190, and fails to cross 24,000, if you see a rejection over this level, showing us bearish rejection candle. So you might target the price to come down around 24,120. This area, this resistance level. So this is the scenario B, and so if you are worried about theta decay, there is another scenario as well. Since today is expiry and which is low, the safest institutional trade right now is short strangle or iron counter. So sell 24,200 call. You can sell 24,200 call and buy 24,250 call for protection. You can sell this because of theta decay, and you can buy this call for protection. And the same way, sell for selling, you can sell 24,100 put and buy 24,250 put. You can sell 24,100 put, and you can buy 24,050 put for protection. So capture the total premium decay as Nifty likely expire somewhere between 24,000 to 2400 to 24,180. So this is the analysis for Nifty option chain. So based on this, the price moves. So hope you got a clear picture on option chain analysis. Let me know if you have any doubts regarding this. So I'll just summarize this for you. So currently Nifty is trading at Nifty is trading as 24,098. So put call ratio is around 1.1, which shows mildly bullish, and structural support is intact. So max floor is 24,100, which is currently the price is trading. So massive put writing base, strongest intraday support. And max resistance is 24,200. So strongest call writing wall, upside cap for the session. So immediate hurdle would be 24,150, and we can see our indicator also complement with the resistance level. So these are the major points for today's Nifty session. So rather than waiting for the price to close below this level in 5 minutes, look in 15 minutes. So 15 minutes always gives us a clear picture. So once you see a 15 minutes candle close below this level, then the price might move till 24,050, which is the next support level where you saw a rejection in today's morning opening. So have eye on this level. Yeah, so we'll be moving to Bank Nifty analysis. Live market. So current spot price Bank Nifty is trading at 57,883, which is down by 0.09%, and it has opened the morning session at 9:15 a.m. at 57,935, and has drifted down about 52 points by 10:57 a.m. So the intraday OA battle is the call OA added 15.42 lakh shares, the put OA added 8.75 lakh shares. So call rating is nearly double the put this morning. So this tells us that the institutional players are aggressively capping the upside and adopting a sell on rallies mindset for the first half of the day. So note that this is for the 30th June expiry, which is 7 days away, meaning these positions have structural weekly weight behind them, not just same day speculative noise. So we can see call writers have dumped 15.42 lakh shares in the market compared to just 8.75 lakh shares from put writers. So the index has split from its morning high of 57 935 down to 57,883. So the bears are clearly trying to control the narrative on Bank Nifty today. So the call side is 58,000 strike. Look at the colossal red bar at the 58,000 strike, which is it is by far the largest accumulation of open interest on the entire chart, towering up to nearly 19 lakh shares. So if we notice the heavy pattern on the 58,000 call bar, the represent massive intraday accumulation. Sellers are aggressively locking down 58,000 as an unbreakable psychological and technical resistance zone for the day. So we'll just mark it in the technical chart. So we could see here the indicator also gives us the supply zone over there. So it acts as a very strong resistance zone, and we also have a resistance line over there. So it has around 19 lakh shares of open interest, which acts as a unbreakable psychological and technical resistance zone for the day. So there, right below it, we have 57,900. Uh, so strike already shows call writers outnumbering put writers, which is acting as an immediate tactical resistance, preventing Bank Nifty from reclaiming 950. So just will also mark that zone as well. So we could see that there's been a reaction after price reaching this zone. So the market has opened. Yeah. So yeah, when we look at the put side, we'll identify the safety nets. So 57,800 strike. It is currently the green and red bars at 57,800 are neck to neck, which is around 5.5 lakhs each. So this immediate battlefield. If the green bar holds, we consolidate. If it stings, we slide. So let's just mark the 57,800 strike as well. So if 57,800 gives away, the next meaningful institutional question is that is down at 57,500. So which holds a solid green bar of roughly 7.5 lakh shares. So the ultimate support is 57,000, which shows a strong solid green bar. So this is a positional support and highly unlikely to be tested unless a major intraday panic occurs. So when we look at where is the support, right now we are sitting at 57,883, 871. So right above 57,800, notice how the green and red bars at 57,800 is are almost equal. So this is the live takeoff for pocket. So the bulls fails to defend 57,800. The trap door opens and the option chain shows the clean pocket down to 57,500, where the next real defense line is waiting. So we had also updated regarding Nifty that it has crossed the resistance level and it has chances to fall around 30 to 50 points. So as mentioned, we saw 30 to 50 points fall. As mentioned, we have seen that there's exactly 30 points fall in the Nifty. So let me know in the comment those who have captured this one. So the sell on rally setup, just look for a pullback rally up towards the 57,960 or 57,980 zone. So I'll just shift the chart to Bank Nifty again. So target is 57,880 to 57,800. And the breakdown setup would be let's wait for a decisive 5 minutes candle breakdown and close below 57,800. This is accompanied by a increasing red bar at that strike. So target would be 57,650 to 550, and SL would be below 57,860. So this is scenario two, and the range bound play would be let's say if you're scared of premium decay, then you can sell 58,000 call and buy 58,200 call for protection. Let the massive institutional wallet 58,000 melt the premium away as long as the index traders sideways to negative. So I'll just summarize the prices again. So Bank Nifty spot is at 57,890 currently, which is trading week down from the morning open of 57,935. So institutional bias is bearish to cautious. Call rating is around The call rating is around 15.42 lakhs, which is nearly double book rating, which is around 8.75 lakh. So the brick wall is around 58,000. There's a massive call OI, which is approx 19 lakhs, and it is the ultimate ceiling for the session. So the immediate pivot is 57,800, where there is an equal fight between bulls and bears. So breakdown point if it is breached. So the major support is at 57,500, which is the next solid institutional floor below the current market level. So these are the points to be remembered while trading Bank Nifty. So these are the view on Bank Nifty index. So this is purely on educational purpose. Manage your risk, analyze market before you jump into a position. Don't blindly go. So, have a proper risk management. So this is purely for educational purpose and knowledge. So we have covered Nifty and Bank Nifty option chain analysis. Let's just move to Sensex option chain analysis within 5 minutes. So now we'll touch upon Sensex option chain analysis. So I'll just switch the chart to Sensex. So Sensex is trading at 77,110 currently, which is up a flat of 0.02%. So the index opened at 915 at 77,094 and has crawled up only 16 points by 11:10 a.m. This tells us that the market is in a strict sideways grind. So put call ratio is sitting at zero point 0.9. PCR of zero point 0.9 indicates a completely neutral to slightly cautious market stance. So it shows that neither the bulls nor the bears have captured absolute control yet. So India VIX is stable at 12.5, which is down by zero point 0.3. So low volatility means options premium are pricing in a very little drama. So with the June 25 expiry just 2 days away, DK Theta is actively working in a favor of option sellers today. So the call OI changed from 9:15 a.m. to 11:10 is 37.52 lakh shares for call OI change. It has increased, and put OI change has increased by 34.48 lakh shares. So the writing number are practically neck to neck. The bears have a microscopic red with increase in 3.04 lakhs more than call return. So it is confirming that market is tightly compressed and it is trading in a range bound. So if we look at the support and resistance level, which is derived by option chain analysis, 77,100 is an immediate pressure. We'll just mark it in a technical chart. So, yeah. So the index is hovering at 77,000. 110. Right here at 77,100, the red call bar is sitting around 11 lakh shares, slightly higher than its green put counterpart. So it shows active overhead selling pressure preventing Sensex from breaking away into a morning rally. So next one would be 77,200 intraday wall. So it is directly above the market. The 77,200 strike holds a very strong red bar, which is approaching around 11.5 lakh shares. So a significant portion is of this is stripped, meaning bears are actively building a fortress here. So when we look at 77,200, we'll just mark the same technical chart as well. Yeah. So so the next one is 77,500 micro ceiling. So further out, the 77,500 strikes stand out with another massive red bar of 10.5 lakh shares. So this represents the definitive upper boundary for the current series. So let's look at the bull support, where the support is there. So if we look at 77,000 concrete foundation, we'll just look at the massive green tower at the 77,000 strike. So it is the tallest bar on the entire chart, sitting at over 16 lakh shares of open interest. So the heavy strike pattern shows that the put writers aggressively stacked the protection here during this morning session. So we'll just mark those levels. So 77,000 is the immediate support level, which has sitting at over 16 lakh shares of open interest. So once we see a break below this level, we can see it's already the 5 minutes candle is already shown a break. So you can expect the price to come below to 77,000 and look reaction over there. So and the 76,500 is a secondary base. If 77,000 were to fail, the next notable accumulation is at 76,500. So yeah, since it's very far, it's very high. It's highly unlikely to for the price to go there. If there is a major news or an uh, major news impacting the market, then the price might go there. So we can expect the reaction over here itself. But since it's expiry on Nifty, have a eye on 77,500 as well. So so let's look at the strategy if we had to use here. So the strategy, like point out your chart that the 77,000 strike has huge volume. Large institutions are running a short straddle here. So because the spot price is at 77, 110 and 77,000, call writers are currently slight in the money and feeling a bit of pressure. So if Sensex manages to push past 77,160, those 13 lakh call writers at 77,000 will be forced to cover their position, which could trigger a rapid short covering spike up towards 77,250. So the setup would be for setup A, the range bound mean reversion. This has the highest probability. So buy the dips near support, sell the rallies near support resistance. So if Sensex dips towards 7720 or 7750 and forms a bullish hammer or a reversal pattern on a 5 minute chart, so buying close to 77,000 put wall would be a highest probability buy. So a stop loss, 15-minute candle closing below 76,980. So that would be better SL because as it created a fake out and closed above 77,000, it shows that there's a manipulation had happened and price is highly unlikely to break that level. So putting SL below that would be a safe plan. And short entry, if you're looking at a short entry, then you need to wait for the price to reach around 77 200 180 to 200. So and if it shows a bearish rejection candle near the 77 200 call wall, the target 7700 to 77 150 and SL above 200 77 200. So if you are looking for a breakout, then wait. Do not chase the market right now. Wait for the decisive hourly closure either above 77 220 or below 76 980. So if it breaks above 77 220, it will trigger a short covering from 7700 to 200. Call writers targeting 77 to 350. So I'll just summarize all the values that so that you'll just get a view on index. So currently Sensex is trading at 77,000. 110. It is in a consolidation in a flat sideways morning zone. So put call ratio is at zero point 0.9. Neutral balance option sellers are controlling the pace. So the immediate ceiling is at 77 200 and the absolute floor is at 77,000, which has a massive put concentration of 16 lakhs and has a major institutional cushion. So the trading context would be the bracket strategy, favorable for premium DK plans. Look for short straddle strategies. So these are my view on index and option chain analysis. So let me know if you understood the entire analysis and let me know your plans for today.
So, hi guys, welcome back. So, we'll be talking about open interest, which has gained overnight, and we'll also talk about the stocks you should keep an eye on, maybe like some stocks of the day. So, according to June 23, 2026, so honestly, today's OI data is telling a very clear story. Like once you go through it, name by name, a pattern jumps out most immediately. The first one we'll talk about is Nifty. So let's start at the top. You can see it's already have put Nifty. No, I'll just put Nifty's chart. Hope you guys can see the Nifty chart. So yeah, Nifty OI has jumped nearly 59% today, and I mean that's not a smaller number. We are talking contracts jumping from 94 lakh to 150 lakh in a single day. So when you see the index itself, seeing this kind of like OI explosion, it basically tells you that big money is coming in and taking positions, long, short, hedges, all at the same time. So what's the 24,100 call and the 24,000 put call? Put today. Those two will tell you which side has the real conviction. And the next one is Vedanta. So yeah, guys, there's a quick update. As we mentioned, yeah, as Harish mentioned that Nifty will go down. He has already told it went down more than 100 points. You can see. After the update, we have predicted that it may go down, and it went down by more than 100 points actually. So yeah, we'll talk about the next song, which is Vedanta. So, since we're getting questions from our viewers, we'll ask them, then we'll talk about the open interest. Yeah, someone's asking we should talk about the Nifty 50. As we in the morning for our clients, we have already given a call. We have given a put call for our clients in the morning, and it went more than 50 rupees today. As we mentioned in the morning, and our clients also already taken that trade. We already given this call in the morning. We have given put call, put option, and it went up by 50 rupees, nearly 75 rupees. Sorry, I should mention. Yeah, we'll. Actually, some of our viewer is asking there is a support level at 24,019. Someone's asking that question. Can you be clear? Can you just ask properly regarding which stock and all? Can you just brief it out so that I can answer? Yeah, actually, since someone's actually asking about the support, so actually we should wait till 5 minutes candle get over. We have some more time for it. We wait till that over. After that, we'll get to know the. Yeah, we'll wait till this 15 minutes candle time frame get over. Time get over. Then we'll talk about that. We'll get to know clear idea about this. Since actually it's happening because like there is a huge false support and supports are actually becoming weak. You can see here in a single candle, like it has broken all three supports here. So these are becoming little bit weak here. So we should wait for a little bit more time. We'll get a clear idea about this. Yeah, hope you're clear. Since someone has asked that question, hope you're clear with your answer. But we'll give a clear answer when we get a proper idea about it after some time. Yeah, we'll get back to the why again. So as I was mentioning Vedanta, you can see the chart, Vedanta's chart. So here where it gets actually interesting. Vedanta OI is up 40.5% today. That's the single biggest stock level move on this entire list. So at once you understand news behind this, all it exactly makes sense. So exactly like what do you think? What happened? Vedanta's four demerged companies listed on the exchanges on June 15th. Vedanta Aluminium Metal listed at 522 rupees, actually above what analysis expected. Power listed at 41.80, oil and gas at 38, iron and steel at 20. So, and here's the real interesting part. If you add up the combined value of all like five Vedanta entire like together entities together, shareholders are actually sitting on nearly 20% more value than the pre-demerger price. But then Vedanta also got removed from the MSCI Global Standard Index on June 22nd, which means passive funds were forced to sell. So you have got value unlocking on the side and forced selling on this or other. That's the tug of war. That's why OI has gone through the roof. Both sides are betting hard right now. You can see the charts. You can see the indicators which I have already predicted here. It has analyzed and it has market is in the bearish movement. It's is in bearish way. The next one is Muthoot Finance. See here in Muthoot Finance, open interest up to 14.54% from 39,000 to nearly 45,000 contracts. So no one big news today, like specifically, but the backdrop is strong. Gold prices globally have stayed elevated, and honestly, when gold stays high, everything's works better for Muthoot. Their collateral values go up, NPLs come down, loan book grows faster. This one looks like a straightforward long build-up. There are someone's building fresh positions on the gold tailwind thesis, and don't blame them like honestly. So the next one is you can see the charts. While I was talking about the news, you can see the charts. You can see about the open interest, and also you can see the movement, how it has impacted the stock. You can see that. And the next one is mankind from. Guys, Nifty, it has a major support test 24,077, and you should actually carefully monitor this. And when we mentioned already, it has went down by 100 points. We have mentioned when we mentioned after that it has went down by 100 points, and we already given this call in the morning at 9 8. In the morning only we have given this signal in the morning to all of our clients. You can see here. The next stock is Mankind Pharma, which has increased open interest of 13.56%. Simple one to explain actually. Mankind's management is at the IFL Invest India conference in London today and tomorrow also. And you know how it works. Whenever a company's top leadership is presenting at a big investor conference, and fund managers start positioning ahead of its expecting positive commentary on growth guidance. Watch for any updates out of London later today. What happens today? And the next one is Prestige Estates. It has increased OI up to 12.79% from 22,000 to nearly 25,000 contracts. And look, the numbers here justify the excitement. Prestige just reported a record pre-sales of 30,024 crore rupees in FY26. That's a 76% jump from the previous year. 76%, guys. Like housing demand across Bangalore, Mumbai, Hyderabad is genuinely strong, and Prestige is one of the biggest beneficiaries. This is a clean long build up, fresh money coming in on the like realty momentum story. And the next one is, of course, Dixon Technologies. OI up to nearly 10% today. And here's what exactly stands out. Volume is 1.58 lakh contracts, which is one of the highest numbers on this entire list. And that's not a casual move. When you see high of open interest and high volume together like this, someone's taking a serious position. Dixon is essentially India's go-to electronics manufacturing play, and PLI scheme, global brands shifting away from China. All of that is still very much alive. This looks like fresh institutional long build-up, and volumes back it's up. And the next one is, of course, JSW Energy, which has increased up to 9.82%. Power and energy transition, same thing we have been talking all month. JSW Energy is expanding hard into wind, solar, pumped hydro. India's energy story isn't going anywhere. Straightforward long below on the structural growth visibility here. And yeah, the next one is, of course, we are talking about Cipla from past 2 days. So again, Cipla. I'll just put Cipla. So see, guys, in Cipla, open interest up to 9.34%. And honestly, this one's got two really solid triggers behind it. Like, first, the US FDA inspected Cipla's Goa plant and gave it a VI classification. In simple terms, that means no major issues found. It's a regulatory green signal, removes a big overhand. And second one is Sipla just appointed Shivam Puri as the new CEO for its Indian business from July 1st. So leadership is sorted, regulations is sorted, while everyone around it today is weak. Sipla is sitting on its too fresh positive. This looks like some long build up and it's one. I watched carefully. So you can see the charts also. So currently, in here, this indicator, all you can observe the all indicators. See from the morning it has went up and it has also broken third resistance. You can see from the from the morning it has broken the third resistance and still up. It's still trading near the above the third resistance, and there is a high probability that it may go up. And it also already predicted by this indicator. You can see in the multi-frame time frame here, all the multi-frames are like in the green. You just keep an eye on the Sipla for today, guys. Since there is a very good two news about the Sipla, there is a two good news about the Sipla in the market. So you should keep a eye on this and you should keep your radar on the Sipla for today. So yeah, the next one is Naukri. It has wait. Let me just put the chart. See, guys, there is a huge gap of opening in the morning. You can see it has started above the third resistance. Yeah, it has increased OI up to 8.4%. Now this one's a little different from the other, and I want you to think about it for a second. Naukri is essentially a real-time indicator for India's job market, and it's a single biggest vertical for Naukri is IT hiring. So with the whole IT sector under Accenture pressure right now, there is a real risk that tech companies slow down their hiring plans. So this one's OI buildup could actually be fresh shots coming in. But betting that Naukri takes a hit of if IT companies like tighten their recruitment budgets. Keep an eye on this, which way prices like moving alongside this OI. That I'll tell you the good story. So you just keep an eye on the Naukri for today. And the next one is Sun Pharma with a Y build of 7.9%, volume of 1.09 lakh contracts, third highest on this list. On the day when IT is bleeding, pharma is the natural rotation trade. Sun Pharma is India's largest pharma company. It's the most obvious defense play, and money is clearly flowing in the today. Fresh long build up on the defense rotation team, fairly straightforward read. And the next one is Infosys, OI build-up of 7.77% from 6 lakh, 6.5 lakh to 6.52 lakh contracts. So, yeah, guys, this is the biggest story. I think everyone watching today's already knows why. Because extension cut is like a full year revenue guidance is like last week, and specifically called on the West Asia's crisis as a reason why deal booking dropped 14.7% year on year. So Infosys areas taken nearly 10% in the US on June 18. So that's on the June 19. Infosys crashed 8% here in India. Nifty IT it's a 52-week low that day, and today OI is still building, which tells you the short side isn't done yet, and the trade is like still running. Yeah, we'll talk about the TCS. I'll put that. So I have put TCH charts. You can see it has built OI up to 4.73%. Doesn't sound dramatic, right? But look at the total value, 1,425 crore rupees of new contracts. When the largest IT company by market cap is seeing its kind of value building in options, it's institutional level positioning, not retail. Same Accenture read through and as Infosys, TCS fell 7% on the June 19th. Watch 2050 to 2100 as the key support band today, and you can see the chart. So it's trading near 2067. So yeah, see, you can see under the, so you can see here our software already gave a sell signal in the morning. You can watch that so carefully. In the morning 9:24, it has given a sell signal, and it has went down by 1.69% of 35 points. 50, yeah, in 2 hours 58 minutes. You can see our software has given a sell signal in the morning, and it has went down. Here it also broke this demand zone, and it went down. You should keep an eye in this particular multi time frame indicator. Also, you can see all the red red are there. Like you can see, there is a very bearish movement. So yeah, because of this news, you should keep an eye on this particular stock. So if you are guys taken any trade, let me know in the comments. Let me know your analysis, and let me do our analysis and check. Like, will if you have any favorite stock, we'll put that stock here, and we'll talk, and we'll also analyze how our tool works in that particular stock. We can check, and we can discuss about it. So yeah, the next one is HCL Tech, which we are talking from past 4 5 days. From its the HCL name is like in the market from past 4 to 5 days. It's running, so it has increased over build-up of 4%. And this one's actually I find genuinely fascinating, because there is two completely opposite stories fighting each other right now. So on one side, some same sector pressure from Accenture's guidance cut. HCL Tech fell over 6% on June 19. On the other side, HCL Tech just picked up 10.5% stake in Sabam AI, as I mentioned, for 1,427 crore rupees, which is a big forward-looking AI bet. So you have got sector weakness pulling the stock down and a company-specific AI catalyst pulling attention the other way. Honestly, this is one of the most interesting charts to watch today. So you should keep an eye on HCL Tech, which two complete different news, two dead opposite complete different news are impacting on particular stock. So you should keep an eye on this particular stock today. So what do you think the top five stocks you should keep an eye today is, as I mentioned, and these stocks will be stocks of the day. So you should keep an eye on this. First is Vedanta. As I mentioned, biggest OI jump on the list, 40.5%. Most complicated story of the day. If you look at the combined value of all five Vedanta entities, the demerger has genuinely unlocked shareholder wealth. Watch 268 rupees as the critical support on the parent stock. That's nearly 52-week low. If it holds there and start recovering, it means of course the passive selling is over and the real buying can begin below 268, and the fresh downside opens up. And the next one is Infosys. Still, it's seeing a fresh OI builder even after the last big crash, down nearly 25% year to date. Nifty IT at 52 weeks lows. Accenture's pencil playing out. Today's question is simple: does Infosys find a flow near 1033, or does that second way of institutional selling push towards 980 to 1000? So watch volume carefully. If a volume drops and price stabilizes, it's short covering. If volume stays heavily and the price keep falling, the Accenture trade is still running. You can see few minutes back we already talked about the Nifty, and I already mentioned that it has went down by 100 points. And in the morning, we already gave a call to our clients in the morning, and after that, it has fell 100 points. It has now it has fell 200 points, nearly 200 points. It has fell. It has came down. You can clearly see. Yeah, the next stock will be Cipla. You should keep an eye on Cipla, as I mentioned. You should. It's doing its own thing completely, independent of the broader noise. Clean FDA inspection, fresh CEO appointment, a long build-up in OI. All these 3 points pointing towards while everything around is a weak. That's the kind of setup I genuinely like. Watch 1440 as the level to clear up on the upside. If it crosses that with a decent value, bulls are clearly in control, supported 1420. And the next one is Dixon Technologies. Yeah, 1.58 lakhs contracts are traded today. If you don't see that kind of volumes in the mid cap names without a serious institutional interest, PLI scheme, global electronic supply chain shift away from China, India's EMI story is full swing. Dixon sits right in the center of all of this IT, trading near 11,980 today. Watch 12,200 as the resistance to clear. If it breaks above that, cleanly, fresh institutional longs have confirmed. Below 11,700 is where you'd resist. And yeah, that's your complete OI picture for today, guys. Like Vedanta is the corporate action story, IT is the sector pin story, and Cipla and Vari are quietly building bullish structures while everyone's IR on IT like sector. Keep watching both the price and OI together. That's where the real story lives. So yeah, guys, if you have any favorite stock or if you have taken any trade, if you have analyzed the market by your own or something, and if you have already taken any trade in the market and you are holding it, you just let me know in the comments and put that stock name in the comments. We'll talk about it and we'll analyze and we'll get to know, and we'll also talk about our tool, how it like, is it predicted or something. Like, we'll talk about our tools accuracy also by taking your favorite stock, right? So just mention your favorite stock in the comment, we'll talk about it. And yeah, guys, we'll be back with the stocks which are underperforming and which are outperforming by sectorial wise. And be with us. We'll be back after 10 minutes with the stocks which are outperforming and underperforming. Yeah, guys, as I mentioned, we'll talk about the stocks which are doing good and which are underperforming sectorial wise. And we have got this very clear split today. Two sectors sitting in the green, everything else in the red. And once understand why each other is where it is, the broader market picture makes complete sense. So let's go through very single sector today, the outperformers, the underperformers, and what's behind each move, what it means for you and your portfolio. This is going to take some time, but trust me, by the end of this, you'll have so much cleaner read on the market than 90% of the people watching today. So the first one, we'll talk about the outperformance. Who's in the green? Let me start with the good news, because on the day like today, where most of the heat map is red, the names in the green tell you a very specific story about where money is actually going. The first one is Nifty Pharma with up to 1.25%. All right. Nifty Pharma is top performers on this entire heat map today, and it's not even close up to 1.25%, while almost everything else is in the red. And look, within the index, 19 out of 20 stocks are trading in the green right now. There is not a narrow one stock carrying the whole index kind of no. It's genuine broad based sector buying. So what do you think it's happening? So two things. First thing is this is a classic defense rotation. When IT crashes, when metal falls, and when bankers get weak, institutional money doesn't just sit in the cash; it moves. And pharma is the most natural safe haven in the Indian market context. Stable earnings, domestic value, revenue base, not overly exposed to the global growth phase. So when the broader market gets nervous, pharma gets brought. That's the playbook, and it's playing out exactly today. But the second thing, it's this is the more interesting part actually. Pharma had a fresh specific trigger today. The US FDA has reached out to Indian pharma companies for supply of ifosfamide, critical cancer drug facing a shortage in the US due to manufacturing disruption at Baxter International. So that's a direct export opportunity for Indian pharma, and the market is reacting to it right now. And let me give you two stocks to look at the right here. One is Piramal Pharma, the biggest gainer in the entire pharma index today, up to massive of 9.8% and trading at 174 rupees right now. That's one stock where FDA news has really lit things up. The second one is Cipla, trading at 1,448 rupees, up around 2%. But remember, Cipla has its own additional triggers. Clean FDA inspection at its glow up plant, as I mentioned, and the new CEO appointment from July 1st. Double tailwind for this one specifically. I have mentioned and told you this news clearly. The Nifty Pharma Index has actually broken out the weekly chart, surpassing its previous spring high of 25,043, which was set back in May. So analysts are calling this as a fresh technical breakout. So you have got two things working together: defensive money flowing in from these sectors and a genuine fundamental and technical breakout story. That combination is powerful. Immediate support for Nifty Pharma is around 25,000 to 25,050. My honest view, it is pharma is the sector to watch, not just today, but for the next few weeks. The relative strength is real. Yeah, the second one is Nifty Healthcare, up 1%. Right alongside pharma, healthcare is other bright spot on today's heat map, up to 1% high. At look, that's significant overlap between these two indices. Stocks like Max Healthcare, Apollo, Fortis, Dr. Lal Pant Labs are in both. Like so, a lot of same rotation story applies here. And you should note down two stocks, which is Max Healthcare and Apollo. As I mentioned, one is trading near 1091, another one is trading at 8415. And Max Healthcare is sitting comfortably in the green. Hospital chains are like Max is showing strong footfall recovery. It's a macro support from healthcare spending, and bullish macro trend is organized hospital chains. Keeps this name attractive on a red market days. Don't be in a hurry to book a profits today. The sector is clearly getting fresh inflows, and the technical setup is looks so solid. And we'll talk about the underperformance. So let's talk about the what's exactly bleeding the which stocks are in the red. So we'll flip to the red half of the heat map. And guys, I just want to be very honest. Today's date is meaningful. This isn't just random profit booking. There is a very specific news-driven reasons behind each sector's weakness. Okay, and now once you understand those reasons, you stop panicking and start seeing opportunity. So let me just take them one by one. One is Nifty Metal. It has down by 2.67%. This is the biggest loser on the entire heat map today. Yeah, Nifty Metal opened at 12,987 and has slid all the way down to touch 12,075 at the low. So that's nearly 270 point intraday range, which for a sectorial index is quite sharp. So what's driving this? What do you think it's driving? Multiple things hitting at the same time. So first one, the US-Iran peace deal, which is generally a positive for the world, has actually hurt metals. Here's the logic: the Strait of Hormuz is reopening. Yeah, that means Gulf metal producers who had supported or slowed explored because of the conflict can now resume operations. More supply coming back into the global market means price fall. So aluminium futures are nearly a 2 month low right now. And the second thing, China, which is weak economic data from China has been rising fresh demand concerns. And China is not just the world's largest producers of metals; it's also the largest consumer. When China like data disappoints, metal globally take a hit. Chinese scrap metals prices across aluminum, copper, steel have been falling through this month, you know. And the third thing, the Fed hawkish hold last week strengthened the US dollar. As we mentioned last week, global commodities are pricing in dollars. The stronger dollars makes commodity more expensive for buyers in the other currencies, which reduces demand and pushes prices lower. And you should keep your eye on two stocks, which is Hindalco, and another one is Tata Steel. Hindalco is currently trading near 990 rupees today and down over 4%. This is aluminium bellwether, and it's taking the biggest hit because aluminium prices globally had corrected near 12%. And Tata Steel, it's hovering near 193 to 195 rupees, also down sharply. Steel names are getting hit by a weak Chinese demand and also flood of Chinese steel exports hitting global markets. And Tata Steel's net profit jumped 124% in Q4. So fundamentally, it's strong, but commodity price pressure is overriding that today. Even though the Nifty Metal Index has been one of the best performing indices year to date, up 14%. That's a strong run has made it vulnerable to profit booking when negative triggers land together. That's exactly what you're seeing today. And the Nifty IT, it's down by 2.04%. All right, we have already talked about this a lot over the last few days, but I just want to give a proper context on the heat map because it's the second biggest loser today, and the story is still developing. You know, the trigger we'll talk about it, and the list still Accenture, the June 18th story. Accenture cut its full year revenue growth forecast and specifically highlighted that their order book fell 14.7% year on year because the West Asia's crisis slowing down large and deal signing. So their shares fell 14% in the US. The ripple in India the very next day on June 19th, the Nifty IT crashed 6%. It's the worst single day fall since 2006, 2023 till 2026. It's a worst single day fall. It has crashed to 6%. So now today, 2026 June 23rd, the sell-off is continuing. And you should keep an eye on Infosys and TCS. I have mentioned it's currently trading. TCS is currently trading 2069, which I already mentioned, and it fell 7% on June 19th. And Infosys, it's currently trading at 1038 rupees, and that's close to its 52 weeks low of 1030. Infosys is down nearly 40% from its 52 weeks high of 1728. When the stock is this close to 52 weeks low on a continued selling pressure, watch for either a capitulation bounce or a breakdown, which is below 1030. Either move would be a very significant actually. So the concern isn't just the Accenture's. Yeah, I just wanted to talk about the whole IT's downfall. The concerns isn't about Accenture's specific numbers. It's what the guidelines implies that enterprises clients globally are slowing down their technology spending decisions because of geopolitical uncertainty. Analysts at Nomura and Acuros are saying that the sell-off has made valuations attractive in select names, but near-term pain might not be done. So watch for Q1 FY27 results. Reason starts next month for the real confirmation signal. And Nifty PSU Bank, the next one, which is down by 1.61%. Yeah, it's third biggest user of the heat map today. And honestly, this one is more about context and positioning than a specific news trigger. India, 8 crore industries grew by just 0.5% in May 2026, seventh month low. Coal and petroleum were the weakest links. We know that, and core sector data matters because it's proxy for industrial credit demand. And PSU banks are the biggest lenders to these two sectors. And weak industrial momentum means potentially a softer loan growth and ahead of our state-owned bank. Two PSU banks to check right now are one is SBI, which is trading 1038 rupees today, down mildly from yesterday's close of 1040. Fundamentally, SBI is solid actually. So net profit up 12.88% for FI26. Gross NPA is at a multi-year low of 1.49%. And this particular dip is market driven, not fundamentals driven. And the next one is Canara, trading around 132 rupees today, also under mild pressure. Same PCU sector rotation story again. So if you are holding Canara Bank, the key to watch is whether it holds the 130 level. Below that, fresh selling could accelerate. So FIS sold 635 crore rupees worth of equities yesterday. PCU banks are often the first casually when foreign investor reduce India's exposure. DII did counter with 1035 crores of buying, but it hasn't been enough to stop PCU banks from sliding today. And the next one is Nifty Auto, down by 0.61%. It is a mild but consistent pressure on the autos today. Nothing dramatic here. No major sector specific news. This is a largely sympathy selling on a risk of day. And two auto names you should note are one is Maruti Suzuki and second one is Tata Motors PV, TMPV. The Maruti Suzuki is currently trading around 13,305 rupees, mildly lower, I know. India's largest passenger vehicle market is fundamentally strong. We know that, and premium SUV demand, export momentum, and rural recovery of all supportive. Today's dip is sector mode, not company news actually. So the Tata Motors, which is like trading near 356 rupees and down at a bit today. This is the passenger vehicle subsidiary. No fresh negative news for today, but Tata as a whole is seeing a mild profit booking. And the fall is relatively contained at 0.61%, though this isn't a serious sell-off, just the mild pressure. And fundamentally, the auto story is India's remains intact. And the next one is Nifty Bank, which is down by 0.85%. So sitting at a 57,442, and look, Bank Nifty has been one of the sturdier performance in the market over the last few weeks. So today's dip is more consolidation on than the breakdown. And I should mark two names, which are HDFC and one is ICICI. HDFC is trading around 786 rupees today, India's largest private bank, mildly lower. The bank's fundamentals remain strong, loan book recovery, and I'm stability. But banking as a sector is taking mild outflows on a risk of day. And ICICI Bank is currently trading near 1,368 rupees, also slightly lower. It has been one of the better performers in the banking space this year, but and continues to hold up relatively better than PSU Bank piece. Key support for Bank Nifty is at 57,082. As long as it holds there, the border trend remains intact. And also the Nifty Media, which is down by 1.20%. Honestly, this sector has been struggling for a while now. Advertising revenue are under pressure. Also, as a corporate Indian tightness discretionary spends. The OTT's description like continues eating into traditional broadcasting. And we should mention two names. One is Z Entertainment and Sun TV, both under pressure today. Broadly in the line with the sector, no fresh news today specifically. This is more of a structural overhang that keeps the sector under pressure on a weak market days. We'll talk about the Nifty oil and gas. We shouldn't forget it is down by 0.54%. And this one has a direct news trigger. Like the US granted Iran a 60-day sanctions waiver on a Monday, yesterday, allowing Tehran to sell oil and receive payment. That's a bullish for a global and supply and bearish for oil prices. Brent crude is hovering around $78 a barrel, which was $18 per barrel. And we should note down two stocks which are ONGC and one is BPCL. ONGC is currently trading 245 rupees and BPCL is currently at 309 rupees. ONGC lower crude prices directly squeeze ONGC's like realization per barrel, but that's the simple math here. And BPCL downstream refiners actually benefit from low crude costs, so BPCL's dip is milder. So within the sector, there is a split: upstream under pressure, downstream relatively holding up. And so the bring it all the home, pharma and healthcare are where the smart money is parking today. And Piramal up nearly 10%. Cipla holding strong. Max Healthcare and Apollo both are green. IT is where the pain trade is still running. Infosys at 1038, TCS at 2069, both near critical support. We have mentioned metals getting hit by a three-way punch of Iran supply. Uh, China demands weakness and strong dollars. Hindalco at 990, Tata Steel at 193, and everything else. SBI holding 1038, Maruti is 13,305, HUL at 2168, DLF at 629. Just the mild profit booking on a risk of day, nothing structural here. Stay defensive if you are nervous, stay potential if you are a long term investor, and definitely keep watching those IT levels because that's the one sector that when it turns can change the entire mood of this whole market. All right, guys, that's the full heat map breakdown for today, and we already talked about the underperformance and outperformance. So you stay with me for through the whole session, and we'll be back with the new updates about the Nifty and other stocks and index. If we have any new updates, we'll come up with the new updates. And if you have any favorite stock, just put that in the comment section. We'll just analyze it as I mentioned again. As I mentioned before, I'm telling and asking you again. You just put your favorite stock in the comments. We'll analyze.
So we'll just quickly dive into commodities. So first we'll start with the gold. So right now, live prices, MCX gold is around 1,47,818 for 10 grams, and MCX gold mini is 1,44,329 per 10 gram. MCX gold high is 1,47,987 intraday. I'll just put the gold chart here. So Indian spot 24K gold is at 14,591 per gram, and 22K carat gold is 13,375 per gram, and 18K gold is 10,944 per gram. So the core tension in gold right now is a tug of war between two opposite forces. Gold fell below $4,150 an ounce on Tuesday, giving back gains from the previous session. So as firm expectations for Federal Reserve interest rate, which hikes outweighed optimism surroundings ongoing US-Iran peace negotiations, both Bank and BOFA Global Research, they both have revised their forecast to include a rate increase in September. So this is the most single important driver for gold right now. So when the Fed hikes rate, the dollar strengthens, where gold becomes more expensive in rupees and other currencies. Bond yield rises, opportunity cost of holding gold goes up, risk appetite for safe haven reduces. So these are the strong factors for influencing gold today. So, when it comes to bullish force, Iran peace plus lower oil. So, investors are now focused on this week's PCE report, which contains the Fed preferred inflation cause and is expected to offer fresh insight into underlying price pressure. Meanwhile, Washington granted Iran a 60-day license to sell oil on international markets, boosting expectations of a faster recovery in global supply. So lower oil is equal to lower inflation expectations. Less urgency for the Fed to hike aggressively is equal to marginally positive for gold. So gold is caught in a range. MCX gold has bounced today 0.42%. So after Monday's selling, but the broader trend since February's Iran conflict began has been downtrend pressure on gold. So why gold fell from high is gold has come under constant pressure since the Middle East conflict, which erupted in late February. So as disruptions to energy flows through Hormuz, which drove oil prices higher and reinforced expectations that central banks would raise interest rate to contain inflation. So for India specifically, the rupee is at 94.68 dollar USD, which adds a question. A weaker rupee means a weaker rupee means gold in rupee terms doesn't fall as much as the international dollar price. So India's gold import duty of 15% plus GST of 3% creates a structural premises. So if PCE comes in hot above 3%, gold could test 1,43,000 on MCX. So if it comes in soft, expect a bounce back towards 1,50,000. So yeah, let's discuss about silver. So when we look at the technical chart in gold, we could see prices making a clear downtrend. We'll just switch it to 1 hour. So So if we switch it to 1 hour time frame, the gold has recently closed below this resistance support level, indicating the price could move in a downtrend. So we also have received a sell signal from the indicator, and we could have gained around 1.77%. So we previously we had given the signal, so you could see the marking here. We had told the price was consolidating near a broken demand zone, which was acting as a supply. So we told we could it could retest this trend level, and it would break this super trend. Then the entire trend might shift. So as it is from our prediction, the gold has fallen 4.66%. So this is the technicals about the gold. So gold is still in a downtrend. So if you are an intraday trader or looking for a short term movements, then you need to focus on the sell side. Since you see, since we saw price closing below this support level, there's a strong. We can see that there's a strong aggressive level, and we could also see there's the order block being created here. So it indicates more sellers are aggressively in the market. So look for if you are looking for a short term, then you need to concentrate on the sell side itself. And if you look at the second indicator, the matrix box shows bullish bearish structure. So this is basically calculated from the RSI divergence. So when multiple time frames RSI divergence shows a bear, then it indicates red. So taking confidence of all, we can see that it's strongly in a downtrend. So we need to wait for a structure shift if we are looking for a long positions. So so this is about the technicals of gold. So we'll be moving to silver. I'll just put the chart here. Yeah. So coming to silver, what we see is India's spot silver is at 2,45,000 per kg, and MCX silver is at 2,26,700 per kg, which is down by -3%, and MCX silver intraday high is at 2,28,800. So silver precious close, which is in COMEX, is $65.58 per ounce, and Gujarat physical silver is at 2,50,900 per kg from 2,64,900, which was yesterday. So what is driving silver today is silver is the weakest commodity on MCX today, down by 3.25%, which is the worst performance across the commodity board. So let's understand why the silver is falling so hard. So dollar strength is crushing silver more than gold. Silver has a much higher beta compared to gold, and when the yeah, it has much higher beta to the dollar compared to gold. So when the dollar index hits a 1 year high, as it has this week, silver takes a bigger hit. So it's basically a negative correlation. When dollar goes up, silver falls, and when silver goes up, dollar falls. So industrial demand concern is like unlike gold, which is primarily a monetary metal, silver gets 56% of its demand from industrial use, solar panels, electronics, EVs, semiconductors. So with global manufacturing PMI slipping and China's economy sputtering despite the AI stock rally, industrial silver demand is under pressure. So COMEX silver is already in a corrective phase. Silver futures continue to trade within the corrective phase following the major 180-degree cycle top established on January 28. So silver peaked near 68 to $70 per ounce in late January and has been trending lower. So when we talk about the rupee factor, which is partially offsetting, India's rupee is at 94.68, which is weakening, which where partially NCX silver prices versus the COMEX decline. So the silver story for 2026 is silver opened June at 2,94,900 per kg and has crashed to 2,50,900 today. A 15% fall in just 23 days. So the February peak, which was there was the Iran conflict war, which was nearing 3,69,000 per kg in Gujarat. So from peak to today, silver has corrected nearly 32% as the war risk premium unwound. So, solar panels installations globally are at record pace. So, EV production is growing, and India's domestic solar manufacturing push under PM Surya Ghar scheme, which requires enormous silver quantities. So, but near term, the macro headlines from a hawkish Fed dominate. But we need to keep a long term bull case as there are many things happening which demand silver. So when we look at the technicals here, so gold and silver, as we all know, they move together. So obviously, when gold is making a bearish structure, even silver has to make a bearish structure. Even we can correlate both the assets and we can look for the manipulation. If the gold is making lower high and lower low, and if suddenly silver starts to shift higher high to higher low, then there is a huge probability of gold turning back again. So when we look at the technicals of silver, uh, so we could see clearly here the silver has could see clearly the silver has retested this pivot level. It has gone up and retested the resistance, gave us a candlestick pattern, and it has fallen. It fell up. It fell around 5% from here. So if we look at the 1 hour time frame chart, there is no support to the price. So we expect the silver to fall till this level because there's a strong support zone. So the price has retested this resistance level. So since it has given a gap down, it has opened below this resistance level. Sorry, support level, which is currently acting as a resistance. So it has given a reaction from here, and it is the price is currently heading towards this support level. So when we look at the smaller time frame, yeah, when we look at that smaller time frame, even we don't find a support level to it. So there was a demand zone. So it broke a demand zone. Now it has currently turned as a supply, and our indicator exactly gave us a sell signal, which gave us around 1.12%. So so it still remains. If you are looking for a since there are many fundamental uses that might say that silver and gold are in a bullish case, but since they are in a correction phase, if you are looking for a short term, then you need to still concentrate on the sell side as they are still breaking a bearish structure. So this is about silver technicals fundamentals. So now we'll just look into crude oil, which is also called as the master commodity. So MCX crude oil is at rupees 6,937 per barrel. So MCX crude oil is at 6,937 per barrel. So its open is at 7,002 and crude high is at 7,015 and low is at 6,930. So WTI crude international is at 73.67 per barrel, Brent crude international is at 77.14 per barrel, India import reference is at 77.14 dollar. Uh, so what is driving crude today is that this is the most important commodity for India. Every single rupee in crude changes India's import bill, inflation, rupee, RBI policy, and equity reports. Here is the complete picture. The Strait of Hormuz, which is reopened and recovering. Crude oil stabilized near $74 per barrel on Tuesday after facing pressures in previous session as investors assessed signs of initial progress in ongoing peace negotiations between the US and Iran in Switzerland. So, in a key development, Washington granted Iran a 60-day license to sell oil on international market. So, raising expectations of a quicker recovery in a global supply. Traffic through the Strait of Hormuz has also picked up, with producers including Kuwait and United Arab Emirates finding alternative routes to export energy, while Iran shipped more than 30 million barrels over the past week. So the supply side is still bearish. Iran has increased visible oil shipments through Hormuz and to almost to the highest level since the conflict began and cut prices for cargoes sold to China. Gulf producers are preparing to raise output, with Kuwait lifting force its notices and Abu Dhabi's ADNOC resuming supply operations. A full reopening of Hormuz could release about 80 barrels into the market, adding pressures to price as demand remains weak. So hope you guys understood about the commodities. So we'll be just moving to the calls that we gave today. So until then, I'll be let's have a interactive session. I'll be answering your questions. If you have any questions, put it in the comment box. I'll just try to answer your questions. We'll be showing our calls that we gave in our community and its performances within 5 minutes.
So yeah, guys, today's corporate announcement as June 23 after the market closes are there are some corporate events which will be occurring. One is Bata India, new middle CEO appointed. Yeah. So what exactly happened? Bata India has appointed Sanjay Rao as the new managing director and CEO. So succeeding Gunjan Shah, a leadership change at a major consumer brand. So it always a watch carefully event. Market typically re-rate stocks when new leadership signals a strategy shift. So watch tomorrow. Will Street interpret this as a stabilizing or a sign of trouble at the top? Bata has been struggling with the footwear demand in slowing urban discretionary market. And the second one is Tata Motors CV price hike. What happened? So Tata Motors announced it will hike commercial vehicle CV prices up to 2.5% from July 1, 2026. So this is a significant announcement for a two reason. One is that it signals confidence in CV demand, and it will be protected margins against the rising input costs. And like it matters in CV price hikes are typically volume positively and margin positive. So watch Tata Motors stocks as a broader CV space. Also Ashok Leyland and Mahindra LCV segment, which are likely to be in the focus too for this. And the next one is Samvardhana Motherson, which is China acquisition. And what do you think happened? Samvardhana Motherson International announced the acquisition of the. Yeah, I was talking about acquisition of 67.78 stake in China's auto cruises technology for 22.6 million. So that makes smart cabin and autonomous driving components. This is a strategic bet on China's EV supply. Uh, the next one is Pine Lab Investor Day Rally. So what do you think happened is Pine Labs rose 3.82% today. Following this, it's investing day where Citi, UBS, and Morgan Stanley are all back into stack with buy ratings. So these three simultaneous initiations from bulge bracket names on the same day is extremely unusual and powerful. So Pine Labs is India's largest POS and merchant payments infrastructure company. So for tomorrow, you should watch momentum stocks backed by these three simultaneous buy ratings from tier one banks tend to run further the next session. High probability for follow through buying. And the next one is HDFC Bank, which is law firm report about. And what happened is HDFC Bank shares are in focus after reports of surfaced the law firms found no merit, like in concerns raised by its former chairman. This effectively clears an overhang that had been waiting on a stock. HDFC Bank is the most widely held stock by domestic and foreign institutions in India. We know that. And a resolution of governor concerns like a re-rating catalyst And you should watch tomorrow. Like if this news get wider coverage overnight, expect HDFC Bank to gap up like at open on Wednesday. And the next one is Craftsman Automation, which is like and what happened is Craftsman Automation has launched a 2000 crore QIP, qualified institutional placement, at up to 8.8% discount to market price. QIPs are actually fast track fundraising method for listing companies. No shareholder approval needed. So no prospectors placed directly with the institutional within days. The 8.8% discount is on the higher end. So tomorrow QIP pricing typically creates a short-term pressure as stock and buy at the discounted QIP price. Classic trading opportunity. So stock could see selling pressure at open in Craftsman automation because of this. Ambit Capital Model portfolio reshuffle. This is the event which is occurring today. So this Ambit Capital revamped its model portfolio today, adding Axis Bank and LIT and Aether Energy, and removing Tata Motors and Coal India. ಯಾರೋ ಬಂದ್ರು ಹೋದ್ರು. So as I mentioned, brokerage model portfolio changes drive institutional rotation within hours. So tomorrow you should watch Axis Bank and LIT, likely to see buying momentum as a ambit upgrade, and Tata Motors and Coal India selling pressure as ambit's institutional clients exist positions. So Ether Energy, fresher positive sentiment from inclusion in a higher profit portfolio. And the next event is Interarch building products with 375 crores orders. So what happened is Interarch secured 375 crores in order in June 2026, only in June 26, 2026. So including an 165 crores order from Vadodara's energy sector. So projects span hydrocarbon, renewable energy, and data centers. Order book is building strongly. So tomorrow, strong order flow, like strong order flow is equal to earnings visibility, and it will lead to institutional buying. Small or mid cap steel structure play that's flying under the radar. Yeah, we'll talk about the semi news. This event is about a margin trading framework overhaul. So what happened is SEBI has proposed the sweeping charges to the margin trading framework. So opening the doors for LLPs, limited liability partnerships, and NCD, which is like non-convertible debenture for margin trading. So this is a big structural change to how retail and institutional traders can access leverage. So tomorrow, this will directly impact brokerage. So Angel One, Zerodha, Motilal Oswal, IIFL as securities as it expands their potential fee base. Positive for brokerage stocks. Yeah.
So I'll just be updating the calls that we gave today. So we gave a call. Uh, so we gave a call on ABB stock. So so in cash segments we gave a call on ABB. Uh, so we gave a call on 9:20, 9:32 p.m. Sorry AM. So we had received a buy signal yesterday. So on that basis, we saw a candlestick confirmation and we gave a call. We gave a call option. So we gave a put option on 9:30 on 9:32. So the option was June 7,200 put option. So we gave around 90. The entry price was around 90 to 92. So this was our entry price. So we gave at 9:32 today. So our entry was triggered at 11:10, and our target was at 97 and 102. 97, 102 and 132. So if we see this, we could and our stop loss was around 65. And if we see this, we could see that the price has reached 171, where our target was around 132, but the price has still made a high of 172. So this was our first call where all targets were achieved. And the second call was around 9:36 a.m., where we gave 7,300 put option to buy, and we our entry price was around 150 to 152. So we could see here around we got a buy, even our indicator has given a buy signal over here. So we got 150. Yeah. So our entry price was around 150 to 152, and our target was around 157, 162, and 198. We'll always give three targets, and our SL was 105. So we had achieved all the targets. So we could see that the price has moved around till 241. So yeah, we had achieved all the targets as well, even in this talk, even in this call, which we gave in our community, and in index we gave Nifty. We gave a call in Nifty. So just so in index we gave. So in Nifty we gave June 24,450, June 30th 24,450 put option. So I'll just show you the chart of it. So we had given this around 9:38 a.m. and our entry price was at 360 to 365. So we could see we gave it 9:38 price has triggered the entry around 11:40, and our targets was first target was at 380, second was at 390, and third was at 448. So price has reached all the targets. Price has reached all the targets, and it has made a high of 622. So yeah, this was our third call. So so these were the calls that we gave today, and we have even updated in our live as well. You could check our live. We would have told regarding Nifty that we have given the call in at 11 o'clock a.m. itself, and we would have also done all the option chain analysis and everything. We have updated in the live. So even when the second target, when we achieved the second target, we have mentioned in the live as well. So do check our live. So that you will get to know the calls that we gave today. And this was the performance of our call. Hope you enjoyed watching live today. So we are at the end of our session. The market will close in around 6 minutes.
We'll come up with the new news and updated news tomorrow, and we'll be analyzing the particular stocks which are doing good, and we'll be continuing tomorrow session. And please subscribe. Yeah, if you want a very good knowledge and very good tool and also good analysis, you just subscribe to our channel, and you can also press the bell icon for the more updated and quick updates. Thank you for attending the session today. And tomorrow we can meet sharp at 9:15. So if you want to contact us, there is a link we have posted in the description. Also, there is a website link, and in the chat box also there is a link. You just go through it and you just contact us anytime. We'll contact you back, and you can get a better idea about this. Yeah, that's it for the today. Thank you so much, guys. Tomorrow we'll meet again. Thank you so much. Have a good day.